Is Micron at $108 a buy? That's what I'm going to cover in this video. In doing so, I'll briefly cover the business model of Micron. Then I'll go over its financials and finally I'll do a valuation. As you can see on the screen, not long ago, Micron was trading at $153 and it dropped to $108 after the earnings. Micron operates in the chip sector, especially in the memory category. They have two types of technologies, DRAM and NAND. And HBM, which is the high bandwidth memory that's popular in data center, is part of the DRAM. And about 2/3 of their revenue come from the DRAM technology and about 1/3 comes from the NAND technology. And they have four different revenue segments: data center, PC, mobile, and automotive. And they also report it in a different way. They call compute and networking, mobile, storage, and embedded. Let's look at some numbers. At $108, the market cap is about $120 billion and the PE ratio currently is at $154 and the forward PE is 12.37. So the forward PE looks very cheap because this company is growing very fast in the coming year. But for a company like Micron, we cannot look into the net income, which is part of the PE ratio. We have to look into the free cash flow because this is a very high capex intensive industry. Let's also look at their growth rate. As you can see on the screen, for the past 5 years, there is no trend for this company because this is a very cyclical industry. So they had negative growth in 2020, 2021 they had 29%, 2022 11, and 2023 they had negative 49, and 2024 they have 61. So there is no particular trend. This is why Wall Street do not like this company in general, because there is no predictability. It's too cyclical. Let's look at the margins for Micron. The gross margin, as you can see, has no trend. The highest I see is 22%. The lowest I see is negative 14%. Negative gross margin, right? And then the profit margin, again, no trend. 3% in the most recent quarter. There's negative 7, negative 20, negative 42. And the free cash flow margin, which is an appropriate metric for a capital intensive company like this, is also really bad. It's 0.48%, minus 6.44%, minus 18%. So Micron is a very cyclical company and it's very, very hard to value it. In order for me to take a decision on whether to buy this stock or not, I need to do some sort of valuation to check the upside. And for that, I need to make some guesses in this case because this company is very, very unpredictable. So I will try to get management's expectations, guidance, and also some analyst expectations to do the valuation. So this is what the company has given for financial year of 2025 quarter one. They are saying they can grow at about 15% quarter over quarter. But if you look at the year over year growth, that's about 80 to 90%. But we cannot take the year over year growth because last year was a down year. So it obviously looked like it's quite a high growth. But we need to look at the quarter over quarter. And they are predicting a gross margin close to 40%. And that's very impressive. The highest that I've seen for this company in their income statement is 22%, right? So this is impressive, 39%. That's going to expand their net margin and also free cash flow margin. So they only provided the guidance for quarter one of 2025. What about the full year? I looked into their presentation. I did not see anything. So I'm relying on analyst forecast. And most of the analysts are predicting that they can grow at 52% in financial year of 2025. And that's what I'm going to use in the valuation. And also they're saying that the HBM, the high bandwidth memory that's popular in the data center, it looks like they're going to have about 20% of that pie of $25 billion. So that's actually fueling the growth in financial year of 2023 and the years coming after. So let me move on to the valuation. Before I do the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Micron. When I do a valuation, usually I do 5 years out. But that's not a good idea for Micron because we don't know what's going to happen 2 years out. Because if you look into their past trend, 1 year they grow really well, 1 year they are down significantly. And then again, another year they grow. So for that reason, I'm only going to do 1 year valuation and show you the upside. So let me look at December 2025 Micron valuation. That's 1 year from now. In 2024, their revenue is $25 billion and analysts are estimating that they can grow 52%. And I believe them because there is a HBM trend, and with that they can make $38 billion of revenue in 2025. For the first quarter, they are projecting close to 40% gross margin, right? And also close to 30% operating margin. So I'm giving them 20% net profit margin, which I think is conservative. With that, they will make close to $7.6 billion of net income in 2025 December. And for a hardware company, the multiple is actually about 15. And for a cyclical company like Micron, I would pay even less. But since they're showing me hyper growth, I'm willing to pay a higher multiple. That's about 20. With that, this company would be worth about $152 billion in 2025. And they have 1.14 billion outstanding shares, so that gives me a price of $133 by next year end. Currently they're at $108. That's about 23% gain in 1 year. That is really impressive. But this 23% gain in 1 year comes with a risk. What if they don't grow? And what if they put a lot of money in capex and this net income of 7.6 billion diminishes? Because that actually happens, because last year they said they're going to put $8.1 billion in capex. Their balance sheet is not great, by the way. So if the entire net income that they get go into their capex, because they are opening a plant in US and they're converting a plant in Taiwan, and they're also trying to open something in India and another facility in China. So this is all capital intensive and it needs money, right? So for me, this is not very attractive. I think that 23% in a year is not very attractive. But again, if they beat the earnings, the stock can go way higher. But when I do a valuation, I will have a framework on the upside. And when I look at my upside for next year, I'm only looking at $133. So if I'm a momentum trader, maybe I would buy this and see how it goes in the earnings. If the earnings are better, it's going to go up. If not, it's going to go down. For me, when I buy, I want to look at the valuation and look at a safe price for me to buy that has good risk reward, and I don't see it for Micron. Let me show you another valuation that's 3 years out, and I cannot assume 50% growth like I assumed for this year on the entire business. What I'm going to do for 3 years out is I'm going to pick the data center business that comes under computing and networking, and then I will apply the 50% growth on that business, and rest of the businesses like mobile, storage and embedded, I'm going to keep them flat because that makes sense to me, right? So compute and networking makes up about 40% of their business, and rest of the 60% is contributed by mobile, storage and embedded. So when I do that valuation, I'm seeing close to $45 billion of revenue in 2027, and I'm keeping the net profit margin as 20% because I'm assuming that they can continue the gross margin above 35%. And if I apply a multiple of 25, the company would be worth about $225 billion in 2027, and the stock price will be about $197. And currently they're at $108, so that represents 83% in 3 years. But a lot of things have to work well for this to happen. And again, if you are a believer in the AI trend and you believe that Micron can take a lot of share in the HBM in the coming years, coming 2 to 3 years, then I think I'm seeing a good return. But for me, I don't have the stomach for the risk that I'm taking for Micron. So I'm going to stay away from Micron.